Hello friends, today is my seventh presentation for the professionals in the corporate finance and accounts function. The subject is valuation of tangible assets. This is my overall 38th presentation considering all the YouTube presentations which I have made so far. What I have included in this presentation are the goodwill, trademarks, patents and copyrights, trade secrets, franchises and licenses, complying with the disclosure requirements of for intangible assets, activities including unethical that can affect business diversity and future references. While I talk about the intangible assets, I will also be sharing about the valuation perspectives for each one of these. Goodwill and its valuation. Goodwill primarily represents the reputation, customer loyalty, and brand value for a company which it has built over a period of time. It arises from the exceptional customer service, a strong market presence, a favorable supplier relationships, or skilled employees. It is reflected by the premium paid by the company for acquiring another company above its net assets, such as property, plant, machinery, inventory, and liabilities, and the overall fair value. Three methods for valuing goodwill often involve the following methods, which I'll be sharing in the next slides. The excess earning method, number two, the market approach method, and number three, the relief from royalty method. First one, the excess earning method. 5 steps are estimating the value of the company's net tangible assets. For example, book value of the assets adjusted for depreciation and impairment. Number two, computing the earnings attributable to the company's tangible assets by multiplying the value of the net tangible assets by fair rate of return. Number three is the estimating the company's total normalized earnings on the ongoing basis, excluding any unusual or non-recurring items. Computing the excess earnings, which is equal to the normal earnings less the earning attributable to tangible assets. Value of the goodwill and other tangible assets is equal to the excess earning divided by the appropriate capitalization rate. This method is often used when significant intangible assets are considered, such as in mergers and acquisitions, or when valuing a company with strong brand recognition and customer relationships. Number two, the market approach method, which is comparing the value of the similar businesses in the market. Assuming that a company B is in the process of acquiring another company A as a target company. In this case, the method will be like following. Selecting companies comparable to the A, the target company, in terms of size, operations, market. Collecting the financial data like earnings before interest, taxes, depreciation, and market multiplies like price to earning ratio. Determining the adjustment needed to size variation, growth rate, risk, etc. between A and other benchmark companies. Estimating fair value for the target company A after adjustments. Value of the total intangible assets will be equal to adjusted estimated fair value for A as above, less the intangible assets of the company A. The value of the goodwill will be equal to the total value of the intangible assets less estimated value of the other intangible like patents. When to use this method? This method can be used to value goodwill in the mergers and acquisition transactions. Third method, relief from the royalty methods. 5 steps. Identify the intangible assets of the company. Determine the hypothetically royalty rate by the valuer if it did not own the intangible assets but licensed it from third party. Calculate the hypothetical royalty cost based on the assumed royalty rate and the estimated revenue profit generated by the intangible assets. Determining the present value of the hypothetical royalty cost using the appropriate discounting rate such as cost of capital, and value of the intangible assets, which is equal to fair market value of the intangible assets less the present value of the royalty cost. This method can be used to for determining the value of the goodwill by estimating the cost savings or economic benefits that a business enjoys by owning its intangible assets such as trademarks, patents, or customer relationships without having to pay the royalties or licensing fees to a third party. Trademark and its valuation. A company's brand value represents a brand name or logo's recognition, reputation, and perception. It encompasses factors such as brand awareness, loyalty, and equity. Trademarks safeguard brand names through distinctive signs such as logos or symbols to identify and differentiate products or services. Trademarks is intangible assets and are trade and transferable. The purchase price is capitalized if it is trademark is purchased from the other company. However, the cost of the internally developed trademarks is expensed as incurred. For this reason, the many trademarks are not presented in the balance sheets. The useful life of a trademark is an intangible asset is a far enough into the future, and hence it is almost impractical for the management to estimate it. Therefore, the trademark with a indefinite life should not be amortized. Valuation of trademarks. It can be done by methods approaches similar to the valuation of the goodwill mentioned earlier and hence not being duplicated. Patents and copyrights and valuation. Patents are exclusive rights granted by the government to protect the inventions. The purchase value of a patent is reflected as an intangible asset in the balance sheet, negotiating the value of the patents. Negotiating parameters are the market demand for a patented technology and the potential to generate more revenue, commercial potential opportunities for the future revenue streams, infringement implications on the business. Therefore, the management and technical and sales and marketing team jointly take a well informed decision while negotiating the patent value. The valuation of the patents can be challenging due to factors such as uniqueness of the invention and its potential market value. Copyrights. Copyrights provide exclusive rights for original works of authorship such as software, literature, music, and films, etc., thus protecting the original work. Valuation of the copyrights. These can be valued by methods approaches similar to the valuation of goodwill mentioned earlier and hence not being duplicated. Trade secrets. Trade secrets such as formulas, processes, or customer lists are confidential and valuable business information. Valuation of the trade secrets can be challenging due to the secretive nature. Valuation methods may include the following: the cost approach based on the expenses to develop or safeguard the trade secret, the income approach based on the expected income economic benefit derived from such trade secrets, and market approach comparing the value of the similar trade secrets in the market. Franchise and licenses and their valuation. A franchise is a contractual agreement that gives the company the right to operate in a particular business in an area for a particular period. For example, a franchise may give the owner the right to operate several fast food restaurants in a particular geographical region or sell the service and products, sell and service the end products such as vehicles, etc., for specific models, say for 20 years or so. Licenses are similar to franchise rights, but except that government agencies typically grant them. Most franchise rights are purchased so that purchase price should be capitalized and presented as an intangible assets in the balance sheet. There are three standard methods or normal usual methods for valuing these franchises. These one is the income-based approach, which values the franchise or license based on the future cash flows that is expected to generate. Market-based approach. In these approaches, value the franchise or license based on the prices of similar franchise or license sold recently. And asset-based approach. These approaches value the franchise or license based on the underlying assets that it includes, such as trademarks, patents, and trade secrets. Other additional factors which are there for to be considered for valuing this franchise and licenses are the exclusivity of the franchise or license, the growth potential in the franchise or license industry, the brand strength and reputation, the support provided by the franchisor or the licensor, and the economic scenarios. Complying with the disclosure requirements for intangible assets. Companies are generally required to disclose information about their significant intangible assets, which include the following: the types of intangible assets held, carrying amounts, useful lives as applicable, methods of amortization, and in the Indian context, the following provisions are applicable: gross block, which is wide general note number 8.7.1.2 to the Schedule 6 of the Companies Act as advised by the Institute of Chartered Accountants of India, describing the classification of the intangible assets. Amortization of the intangible assets, general note number 9.5.6, and accounting standard AS 2.26, which prescribe guidelines for reporting this. Activities that can affect business adversely, including the unethical ones. There are a few common aspects which are applicable equally to goodwill and trademark and patent. These are overestimating the value due to improper or exaggerated assessments resulting in misleading financial statements, submitting financial reports and disclosures that are misleading. Trademarks. Making false claims by misrepresenting the ownership rights to the trademarks and misrepresenting the trademarks usage to enhance the perceived value of the assets, and this leads to many court cases. Trade secrets. Stealing and selling of the secrets like customer lists or proprietary software or formulas or designs to competitors or third parties and obtaining kickbacks. Patents. Withholding information about the patent infringement risks or disputes, thus impact the value or validity of the patent. Making false claims by misrepresenting the ownership rights to patents and copyrights. Franchise and licenses. The franchise or licenses continues to franchisee continues to use the signage and trademarks of the licensor even after the expiry of the franchise license period, and sells unauthorized products or services to innocent customers by buying it from the spurious market. Selling end products by sourcing end products from spurious manufacturers, rendering services for the licensed end products by sourcing spares that are fake or spurious by procuring these from unapproved suppliers, and overcharging end customers beyond the prices of the in the license agreement or methodology prescribed in the agreement. Future references. My second book on corporate finance and account function, the transcript has been finalized and it is in the editing stage and will be launched in the next few weeks. You can also refer to my blog on the website, for which reference is given here. You can also refer to some of the articles of interest related to your finance and accounts function and otherwise in the facebook.com ethical process and linkedin.com oblique in oblique arvind.ang. Thank you very much.